Hello, and welcome back to Bonis Life, the channel where we navigate the electrifying and sometimes terrifying world of cryptocurrency with intelligence and a healthy dose of humor. I'm your host, Boni. This week, we're standing at a fascinating crossroads. The market is whispering sweet nothings about a Santa Claus rally, but the macroeconomic calendar is looking like a final exam we forgot to study for. So, is it time to pop the champagne or brace for impact? We'll start by dissecting the past week's chaotic price action with some cold, hard technical analysis. Then, we'll unveil our comprehensive calendar of the pivotal crypto and financial events you absolutely must have on your radar for the first week of December. We'll also tune in to the frequency of the market's biggest brains, from institutional giants to seasoned traders, to see what they are predicting. And finally, I'll equip you with actionable strategies to not just survive, but potentially thrive in the week ahead. Let's get to it. All right, let's put the market on the operating table. This past week has been a classic tale of a bull and a bear wrestling in a phone booth. After a gut-wrenching drop from its October all-time high of around $126,000, Bitcoin found its footing, rebounding with gusto from a low of about $80,500. We've seen a textbook falling wedge breakout, which is typically a bullish recovery pattern. The surge in volume during that bounce was a telltale sign of accumulation. The big players were quietly buying the dip, while retail was panic selling their Christmas present money. Currently, Bitcoin is trading around the $91,000 mark. The key battleground is a tight consolidation range between $90,000 and $93,000. Think of it as a digital waiting room. The volume has tapered off, which tells us the market is catching its breath, coiling up for its next big move. The bulls are eyeing the $93,100 resistance. A convincing break above that, with significant volume, could pave the way for a run towards the $96,000 to $98,000 region. However, the bears are lurking just below. A slip below the critical $89,500 support could see us retesting the lower $80,000 range faster than you can say margin call. The oscillators are giving us mixed signals, like a traffic light flickering between red and green. The Daily Relative Strength Index, or RSI, is hovering around a neutral 50, but the MACD indicator is showing a bearish crossover. This suggests that while the immediate selling pressure has eased, the bulls haven't secured a decisive victory just yet. The Fear and Greed Index is currently at 29, which is firmly in fear territory. As a contrarian, I can't help but raise an eyebrow at that. Extreme fear often precedes a market bottom. So, while the charts are screaming caution, the sentiment is hinting at opportunity. For the week ahead, the technical picture is one of tense equilibrium. The market is at a pivotal crossroads. My prediction? I expect continued consolidation for the first couple of days, followed by a decisive move post-Wednesday, likely triggered by the macroeconomic events we're about to discuss. The direction of that break will set the tone for the rest of December. The key is to be patient and wait for confirmation. Now let's talk about the week's main events, because in crypto, a day without a catalyst is like a day without, a 10% swing in some obscure altcoin. This week is packed with both crypto-native events and macroeconomic bombshells. First, the crypto calendar. On Monday, December 1st, we have a flurry of activity. Lux gets its AscendX listing, and Apetum, APTM, lists on Poloniex. More significantly, Axel is upgrading its testnet to support Cosmos SDK 0.50, which promises to slash block times from 5 seconds to 1. That's a serious performance boost. Ontology, ONT, is also rolling out its mainnet 3.0 upgrade with new tokenomics. But the main event for the crypto world this week is on Tuesday, December 2nd, with VeChain's VET Hayabusa mainnet launch. This is a major overhaul of their protocol and tokenomics, and it's expected to have a high impact. On Wednesday, we have the highly influential Fusaka upgrade for Ethereum, which could be a major catalyst for ETH. We also have several token unlocks to watch out for, which can create temporary selling pressure. This includes Optimism, OP, Zora, ZORA, and Camino, KMNO. While these affect individual projects, a large wave of unlocks can ripple across the broader market. Now, for the main course, the macroeconomic calendar. This is where the real fireworks are likely to come from. On Monday and Tuesday, we'll be watching PMI and GDP data from Brazil and China. But the real action starts on Wednesday, December 4th. All eyes will be on U.S. Federal Reserve Chairman Jerome Powell as he gives a speech, followed by the release of the Fed's Beige Book. This will give us a crucial window into the Fed's thinking on the economy and future interest rate policy. Then, on Friday, December 6th, we have the big one, the U.S. payroll report. This is the single most important piece of economic data for the week. It's a global economic barometer, and it will heavily influence the Fed's next move. A weak jobs report could fuel expectations of more rate cuts, which would be rocket fuel for crypto. A surprisingly strong report, however, could throw a wrench in the works. So mark your calendars, because this week the Fed is the main character, and we're all just living in its narrative. Beyond the charts and calendars, what are the underlying fundamentals telling us? The big picture is surprisingly constructive. The primary driver is the anticipated pivot from the Federal Reserve. As ARK Invest's Cathie Wood puts it, the end of quantitative tightening is a de facto easing. This, combined with a near 90% market expectation for another rate cut in December, is creating a powerful tailwind for assets like Bitcoin. We're also seeing a seismic shift in institutional adoption. This isn't the retail-driven frenzy of 2017. This is Wall Street. BlackRock, Fidelity, and others have not just dipped their toes. They've jumped in. We've seen over 618,000 Bitcoin flow into spot ETFs, and on-chain data shows a consistent trend of coins moving off exchanges into cold storage. This is accumulation, plain and simple. These are long-term holders, not tourists. This institutional embrace is what's prompting some eye-watering price predictions. Joseph Raczynski, a futurist at JT Consulting, sees Bitcoin hitting $151,000 in December, stating, "Institutions are just able to start getting involved. It's just the beginning." Ben Ritchie of AlphaNode Global is even more bullish, predicting a potential top of $200,000 this year, driven by fixed supply, rising institutional demand, and broader acceptance as a store of value. Even Tom Lee of Fundstrat, who has softened his earlier predictions, still sees a recovery to over $100,000 in December as highly plausible. Of course, not everyone is singing from the same hymn sheet. Euro-Pacific Capital's Peter Schiff remains a staunch Bitcoin critic, predicting a continued decline. And we can't ignore the regulatory overhang. The SEC has been on the warpath, though the approval of Bitcoin ETFs was a landmark victory. Europe's MiCA regulation, coming into effect soon, will bring more clarity, which is ultimately a positive for institutional investment. So the fundamental picture is a tug-of-war between a highly supportive macroeconomic environment and institutional adoption on one side, and regulatory uncertainty and the risk of a hawkish Fed surprise on the other. For now, the bulls seem to have the stronger arguments. So, how do we trade this complex and fascinating market? This is not financial advice, but here's how I'm approaching the week ahead. My strategy is one of patient opportunism. The market is in a state of consolidation, and trading within this tight range is a recipe for getting chopped up. The smart money is waiting on the sidelines for a confirmed breakout or breakdown. Here are two primary scenarios and how to play them. The bullish breakout scenario. If Bitcoin can decisively break above the $93,100 resistance level with a significant increase in volume, I would consider this a strong bullish signal. My first target would be the $96,000 to $98,000 zone. If the momentum continues, the psychological barrier of $100,000 is next, followed by the major resistance at $104,000. For this trade, I would place a stop loss just below the breakout level, around $92,000, to protect against a false breakout or fake out. The bearish breakdown scenario. Conversely, if Bitcoin breaks below the critical support level at $89,500, this would signal that the bears have taken control. My first target on the downside would be the $86,000 support level. If that fails to hold, a retest of the $80,500 low is very much on the table. For a short position, I would place a stop loss just above the breakdown point, around $90,500. to manage risk. For more advanced traders, the derivatives market offers some clues. The funding rate is currently slightly positive, but not excessively so, which means the market isn't overly leveraged long. The long-short ratio is also relatively balanced. This suggests that a move in either direction could be sharp and swift, as there isn't a strong consensus leaning one way or the other. My key advice for this week is this: let the market come to you. Don't force a trade. Wait for the key levels to break and for volume to confirm the move. The events of Wednesday and Friday will likely be the catalysts. Trade the reaction to the news, not the news itself. And as always, manage your risk. In a market this volatile, capital preservation is king. And that's a wrap for this week's deep dive into the crypto universe. We have a market at a tipping point, a calendar full of catalysts, and a battle of narratives between the bulls and the bears. It's going to be a thrilling week, and you are now equipped with the knowledge and strategies to navigate it. What are your predictions for the week ahead? Are you bullish or bearish? Let me know in the comments below. And if you found this analysis valuable, do me a favor and hit that like button, subscribe to Boni's Life, and ring that notification bell so you never miss an episode. I'm Boni, and remember, in the world of crypto, the informed investor is the successful investor. Stay sharp, and I'll see you next week.